It's May from Markets with May, and today we're going to be talking about AMC, which just reported earnings. And actually, a lot of the companies that I know people are very passionate about reported. So I will also, hopefully, knock on wood, I get it done tomorrow before the open, do an upstart video. So for those of you that are in both of these, just give me a little bit, half a beat to digest everything. AMC had an amazing quarter, and we're going to go through it because I think the thing that we as shareholders potentially need to always discuss is what happens next, because there's some things. Okay, disclosures: past performance is not indicative of future returns. I own the ape shares still, and I have a couple of different pieces of their debt at this point, because I still think this company is not going bankrupt, and I do think this is an appropriate way to invest in it. And of course, I'm not making any investment advice one way or the other. You do you guys. You got to do your own due diligence. But hopefully, to the extent that you're looking at the financials, this video helps you out with that. Now, I want to kind of talk through the interesting thing was they released the earnings first thing in the morning, which they don't typically do, and that had to do with some concerns that they had that if anything happened during the middle of the day, such as, we finally hear back from Judge Zern, they would be totally having a problem, because the call would then be at the end of the day and they would then need to do some crazy disclosures therein. So by going ahead and posting that at the beginning of the day, that was a big CYA. Some people wondered why they did that. Were they just trying to be mean to the shorts? Well, if that's a side effect, why not? It's the way that I think about it. But okay, so let's go through it. Obviously, a great quarter from a just pure earnings perspective, but because if you're a shareholder and you're longer term, you can't just look at just the income statement. So obviously, we're not going to do just the income statement, but overall, this is great. We finally are net income positive to the tune of 8.6 million. It's small. It's 1 cent a share, but it's better than where the company's been at in the past. Revenue up 15%. Costs were up 6.8%. I just want to show this to you because I have a lot of folks that are still learning to navigate the financials. And my dream world, these videos somehow help you feel confident that you can look at this on your own at some point, or at least you can look at it and feel confident that you're asking the questions that you want to be asking, that sort of thing. But these costs up 6.8%. So all you do for that is you look at the total revenue, right? And then you add up all this stuff and you get the costs, and you'll see that they increase year over year only 6.8%. That's margin expansion. That's a really good thing. It means that the business is actually getting leverage. And that has 100% to do with the fact that the movies are just better this quarter versus last year. He talked about on the call that we had 19 blockbusters versus at the same time this year only 11. But at the same time, we are still shy of 2019, which the industry really needs to get back to. But I do want to take a little victory lap that he did not talk about on the call, and I think is a really important facet if you're going to be going through these numbers. And that has to do with what exactly is the nature of this business, in the sense of there's a lot of BS. There's a lot of BS. Let's call it what it is, from the shills or whatever you guys want to call them. I don't know all this jargon that talks about the fact that he's not getting rid of any theaters or he's not doing his job to reduce costs in the business. That's just not true. Okay. I wanted to show this slide. And I think some of the stuff is coming from the 10Q, and some of the stuff is coming from the earnings release. For whatever reason, the information wasn't identical. Typically, the stuff that comes in the earnings release is put in an 8K, but because they were worried about that weird issue with Judge Zern potentially coming out today, but it also telegraphs that it will come out sooner than later. But because of all of that, the Q was posted and I didn't get a chance to look at the K, which is usually identical to the news release. Anyways, the point is, if you're not seeing this information in the release, it's in the Q. I swear all these documents come from one of those two places. But what's important to understand when you're looking at these numbers is that he did actually shrink both the number of theaters and the number of screens. And one of the clarifications that he made on the call one of the clarifications he made on the call is that PLF, that large format screen, makes like 5x what a typical screen makes. It's a big deal. And if he had infinite cash, if we actually had capital, we would upgrade. I don't know why we're saying we the shareholders, but he, on behalf of the shareholders, would upgrade more theaters to be more profitable. The other thing I really want to show you so that you understand this as you're going through the numbers, this right here is a breakout that he does that's wonderful. And regardless of how you feel about Cinemark, it is always smart to review the finances of two kind of companies that are competitors in the same industry so you can get a really good sense for how to think about the numbers in context. And so I have a video on Cinemark if you want to just see that from the other day where I compare Cinemark with AMC. But what you'll see if you look at that is that AMC tickets are more expensive. Why are they more expensive? Because it turns out that given what COVID did to everyone, AMC still had, despite all of the CapEx that we've slowed all the way down, we'll get back to that. Despite all of that, they actually had better theaters. And so people are willing to pay more for the large format seats and the recliners. And in this particular queue, he gave a lot more detail than I'd seen in the past. I mean, I think it's in other things, but it was very nicely laid out here in this the update was nicely laid out. I believe it's the queue. I don't think it's in the release, but it's very nicely laid out how many theaters had what, where, when, and why. Okay. So premium seating, even though we're calling it premium seating, that's really nice, but really, to the extent that we ever get any additional capital, which we are going to go through, PLF is where we'd like to go because it makes more money, period. Okay, cool. Hopefully that made sense. Now let's continue through this revenue line item. So I'm going back to the income statement for folks that are trying to grow this skill set so they don't ever need to listen to anyone and feel like they're not, they're being lied to or whatever, but they can go in the docs themselves. So I'm going back to this revenue in the income statement, which is in both those documents. And I'm going to break out more clearly, or I'm going to talk about how the breakout is done. So here is the breakout. This seems to be on the wrong place. Let me see. This is the revenue breakout. Okay. Just the revenue. And then I will go through exactly what the gross margin implication is. But here, I wanted to show you this relative to the previous quarter. So I pulled out the previous quarter, March 31st, so you can also see sequentially what's happening. So it's very common for analysts to look year over year because there is seasonality 100% in the film business. Okay. In the summer, when your kids are out of school, people watch more films, but there's also sequentially, we just had more. If you're trying to understand what happened in the first quarter, were there a lot of blockbusters? Yes, there were. However, summer has been even better. And again, June does not include the blockbusters that came out in July. So it actually doesn't include like Barbenheimer and all that stuff. Pink, trying to show my positivity towards to AMC here, Barbenheimer. Okay. But so realize that these numbers are still ending in June, not what we just saw in July, which was a crazy good, best ever month sort of thing. And you can see that relative to last year, tickets, which is what admissions is, up 14%, food and beverage up 23%, and other is down 3%. Let's talk about what that is, okay? Other really is screen advertising, and then it is actually some of the debt stuff that's mixed in there in the most bizarre way. That's what that down 3 is. So I wouldn't worry about the other because it's really, if you even look at the size of it, it's a big fat nothing, but the other two are really important. And so if you compare it to March quarter, this is actually what you would typically expect for seasonality. So March to June, not that big deal. If we're looking next quarter, we may see a much bigger liftoff because really, truly, June was something spectacular. And hopefully, knock on wood, we can get August to be that way too. Let's see. But that's the breakout of revenue. Okay. Now we have to go through expenses. And he talked about this, but I don't think it's really fully appreciated. Okay. As far as admissions go, the ticket price, like I said, because the AMC theaters are legitimately better, see the previous slide that I did. The admission gross margin here, it's kind of synthetically gross margin. There's some people that are going to be upset with me for saying it that way, but oh well. I'm just using film exhibition costs and dividing it by admissions, and you'll get a 49% gross margin every single quarter. It'll be approximately that. That is significantly higher than Cinemark. Go ahead and check out my video on that so you can kind of see the differences in these businesses. Cinemark comes in about the same for food and beverage at this point in time. Sometimes AMC comes in maybe 1% higher, something like that. But every single quarter, it kind of varies back and forth. But food and beverage gross margins are huge. That's a big way that the business makes its money is on concessions. Okay, really cool. And then in the future, hopefully that will change. But what I want you also to see on this, okay, because this is kind of, I think sometimes when you're listening to all the new objective, it's hard to get context as to why certain people might be saying things that they're saying when they're either criticizing or very excited about some of the new things. Food and beverage, understand when you're looking at this that the other line item is a mixture of stuff that gets to 115 million. Okay, right now the other stuff is too new to make a difference on revenue. Okay, and when you're thinking about new objectives, you want to think about, okay, I'm starting it, I just started it in the last X number of quarters, but I'm hoping it will grow to be meaningful to revenue. So on the call, he discussed the idea that he sees so he discussed on the call that he saw that after the exclusive with Walmart ended, he could see that being $100 million revenue business. That actually is big enough to make a big difference on the income statement. But just so that you know for the future, when you're looking at different objectives that he's doing, some of them will help baby on the margin, but some of them are actually big enough to make a full line item on the income statement. That's what I'm mostly looking for those of you that are wondering why I say the things I say. Okay, cash flow. All right. If we're honest, I wasn't super thrilled about cash flow. And I'm not super thrilled about cash flow because this is ultimately how he's going to pay back debt. And if there's one thing to criticize that the call went light on, it was cash flow. And also, by the way, I'm also going to say, if in case anyone at AMC is watching, please, guys, you cannot do your statements this time. I know you were trying to get it all out fast, but you have to not do this next time because it was so painful for me to double check all the numbers and make sure I understood. So usually the cash flow statement is given usually the cash flow statement is given for the quarter, but they did a 6-month cash flow number. So I had to do all this subtraction and what have you. So, however, this is actually accurate and correct. What you do is you take the 6-month number and you do a subtraction using the previous Q to try to back out, and you'll end up with exactly these numbers. So there's no cheating on any of the numbers this quarter. This is correct. So cash flow we're still cash burning about 99.8 billion. Okay. That is a problem. And it's a problem. I don't want to say it's a problem like, oh my gosh, this was a bad quarter. This was a great, outstanding quarter. But this does really speak to more than anything why some folks feel passionately that we got to get past this silliness of this legal situation and raise capital, because as long as we're burning cash, we can't reinvest. So let's talk about this. EBITDA was positive, and there's a couple of there's a few different things that are different between EBITDA and cash flow. Okay, so EBITDA positive is a cash flow metric in fairness, but free cash flow takes into consideration the operating CapEx that has to happen. What is operating CapEx? Okay, you're running a theater. You can think about it like your house, okay? Even your house, right? Right now, AMC is not doing any big renovations. I mean, there are a few properties where you must do the renovation because that's outstanding from when we purchased it, when AMC purchased it. But it's kind of like this. Mostly there's this concept of maintenance CapEx. That's changing light bulbs. Some drunk guy puts a hole in the screen. You got to replace the screen, okay? Stuff like that. And right now, the CapEx that's being spent on maintenance is so crazy low. Here, let me show you the number one more time so you can see it, and then I'll stay on the slide so you can see it. If you look at the total CapEx, it's only 48.6 million. I did not know this, but he said it on the call that at one point that was 500 million. Okay, so it was a significantly larger number. Right now, we're just barely skating along like you do when you lose your job, but you know you got to replace a bunch of stuff in your house. That's what's happening right now, and yes, the quarter is a lot better, but if you raised capital and just were able to take care of some of these things, there's a lot that could happen. And I think that that's the benefit of the back half of this call. He gave a use of proceeds. He told you what he was going to do with the money if he did raise capital, and how that raising of capital would 100% relate to making more money for shareholders. Okay. And remember, if you raise capital through dilution and you actually become profitable and cash flowing, you can always buy your shares back. So it's not the end of the world to dilute a company that is currently experiencing a cash burn. And let's just be really clear. Why are they experiencing the cash burn? They're experiencing the cash burn because the interest payments are so high. The cash burn is 99.8 million. The interest they're paying is 134.7. Now, some of this interest payback is because they are in fact buying back and retiring shares. And if there's a minor penalty, they pay it. Okay. So that's it. But let's actually look at the debt one more time to be really here's the statement of cash flows. I'll come back to that. And I'll show you how you can do it if you wanted to double check the numbers. But if you look at this on the balance sheet, current assets is significantly lower than current liabilities. And you can remove the deferred revenue and income, because deferred revenue and income is basically people that prepaid for movies. That's what that is. So every quarter will be about the same. Okay. So it's about 1.3 billion current liabilities. You can think about that against the 740. That's the problem right now. We are actually burning through cash. Okay. That's one way to think about it. It's very ham-fisted. The other way to think about it, so the other thing I kind of want to show you is, let's talk about this long-term debt right here. Did he pay back debt? Yes, he did a little bit, a little tiny bit. Okay. Remember, we've got 100 million that might walk out the door because of this stupid lawsuit, which sucks, right? But you still do have some debt pay down relative to December. Okay. This is the funkiness. Oh my gosh. I don't know why I have this here. I have the wrong balance sheet. Okay. You know what? We're going to ignore this and use the other items. This is, sorry about that, guys. You will see a debt pay down here. You can see it here. Here's June. 4.8 billion is the carrying value of the finance liabilities, leases, etc., versus in March 4.9. So there's a little baby hair of a pay down, and it's been paying down since December. So every quarter we've made progress on that. The one piece of debt that we're paying down, and I've talked about this, is this one right here. These 10, 12 PIK toggle second lien sub debt 2026. Okay, what is that? Just so you can kind of understand what that PIK toggle is. The PIK toggles need to be paid down. Number one, because the rate is really high, even though they're second lien, so they're not first in line and there's no big deal, but the rate's high. And also, the financing of them isn't fun, quite frankly. Like right now we're being charged at 12%. Now, also, I'd love to see the Odeon senior subs get paid down. Okay, these right here. This was from the purchase of Odeon, right? Due 2027. But number one, they're not due as soon as the 2026, even though they're rocking a slightly higher rate. And number two, they're secured anyways by the building itself. And it's like, I want those two paid down, but I really want the 2026 paid down. And I'll explain more clearly why I want the 2026. I don't own this piece of debt, by the way. I own a different piece of debt. So it's not like I'm even talking my own book here. The reason that we kind of need it paid down is this, right? This is the principal amount of borrows. This 10 million that we're due this year, no problem. We're going to be fine, okay? The 2024s next year, 25 million. 2025, 118 million. Probably okay, to be fair. But the AMC owes $3 billion in 2026. And it's just like anyone that owes a bunch of money in one specific year. You got two options. The first option is you pay down as much as you can. And the second option is you refinance it. However, and you have 2 years to do it. So but it's not ideal. And the reason it's not ideal is, number one, right now the banks are a little bit cuckoo. Let's call it what it is. All right. And so specifically because AMC is in what we call the high yield market, it's not straightforward how they're going to be able to finance specifically non-secured debt. Okay. Secured debt where the bank gets to take a building at the end, no problem refinancing that usually, because a lot of banks want the building at the end, right? Or they can figure out what the rate would be so that they could take your secured debt. they're in line and they've got a specific asset against it. But unsecured debt don't work that way. It's just unsecured, and you got to be a net taker of whatever interest rate people are willing to give you, whatever terms they're willing to give you. So that sucks, with all due, for lack of a better way to describe it. That's why I am focused on that PIK toggle more than anything else. And also, that's why you're going to see that specifically paid down, in my opinion, unless somebody else just knows more about the debt side. Totally give it to you. It's not easy to know all the debt stuff. Yeah, so that's what I'm seeing them pay down. I'm stoked for them to pay it down, but eventually they will have to either refinance some portion of that or sell capital, or sorry, sell shares in order to do it. Not going to be worth refinancing, pretty much a guarantee. Okay, I'll come back to your question on what a guy. I don't necessarily agree with you on that. So they can either refi it and push it back, or alternatively raise capital, $1.1 billion, or, and more importantly, a combo of both. If they do a combo of both, then you could see the rates still coming in a touch, and then you end up okay. Yeah, so that's that. Let's see what else. Oh yes, this is what they've already paid down. You can see in 2020, you can see like what the debt repurchases are. Last quarter it was 103, so they did about 45 million in principal repurchase and reacquisition costs. They continue to do these. They continue to buy the debt on the open market. Okay, what they're doing. And just for folks that don't know that you can do this, this is 100% something you can do. I don't think a lot of retail brokerages allow you to do it. E-Trade definitely allows you to buy and sell bonds, now owned by Morgan Stanley. And there may be like Vanguard. You might have to use a broker assist at Vanguard or something else, but you absolutely can get quotes on bonds, and you absolutely can buy bonds. And right now, some of the bonds trade as low as sub 40 cents on the dollar, meaning he borrowed for every $100 he borrowed, he only has to, like, if you buy the bonds outright, then you retire at 40 cents on the dollar. Okay. So the bank is happy to give you back your loan. So now you are the lender to yourself at 40 cents, even though you owed $100. That's what is actually happening in the background. And he's doing it mostly to those PIK toggles that I told you about that are done at 10 and 12%. So that is also an option. If he starts to raise equity capital, those bonds probably trade up a little bit, but he still might be able to get some of them at a discount, or he might just have the capital there for half a beat and see how the debt trades and then buy it back. That's what you'd expect to potentially see on the debt side. But you really, with these types of things, don't know till you know. But that would be something to consider, or a way to think about it, is if they did the transactions as a 2-4. The other thing they could do is what they did with Antara, which I know pisses a lot of people off, but if they did it after, if we get past this moment in time and it's all properly announced as a form of dilution, then maybe people will chill out. But you can absolutely equitize the debt directly with the lender. That would look exactly like Antara and probably piss half of you off. But at the same time, I'm telling you, $3 billion has to go by 2026, right in the middle of a financing crisis, not a financial crisis. It's a financing crisis, because so far the banks, which I cover, are fine. Okay, couple other things I just want to highlight before I take questions. Sorry, but there is a lot on this call. They did mention that they have liquidity for the next 12 months. I showed you the cash burn so you can understand why they said it that way. The company believes operating revenues will need to increase to levels in line with pre-COVID operating revenues. It's down 21% relative to 2023. And he talked about this on the call, okay? Right now, 9.5 billion box, thumbs up, 10 billion box potential. But the box used to be at 11 billion. Box office sales I'm talking about. And the industry was really designed for an $11 billion box year. Now, through this entire period, we've reduced the number of theaters, period, since so many theaters went bankrupt. And also AMC itself has kind of shored up and gotten rid of certain assets that were just not performing well. So even if you look at the documents from Discovery, you will see that at 9.5 before, the cash burn would have been even higher. Still, the theater business is still in recovery mode. And also, you got to pay back some of that debt and the capital structure that you took on because of 2 years of COVID. So that is partially what's going on there. Hopefully that's helpful. Let me know in the comments if that didn't make sense. Let's see what else. Oh, okay. And then there were some things he mentioned. I told you about the 100 million in revenue on the popcorn, new objectives in candy, but that's all future state and could be really beautiful. But you have to get past this year. The merchandise store is doing really well. It still can't be broken out as a separate component of revenue, so it's not yet where it could be in the future. And then I really do want to highlight the reason why that back part of the call was what it was. He's telling you that if this case finalizes, he will do what he really believes that he should do as a CEO, which is shore up the balance sheet. I showed you the balance sheet and why he feels the way he feels. Other people feel that he should not do that, but that is a discussion that, it is what it is. Okay. Like I could take both sides of it, but truly I do think it wouldn't be bad. It wouldn't be a bad thing to have cushion. Let me say it that way. Okay. So I kind of can see both points of view, but he said that what happens whenever you do an offering is you have to raise capital is you have to provide a use of proceeds and how that use of proceeds will actually build the business. So he actually provided that in layman's term in the call. And they included number one, deferred maintenance. Right now, the theaters, there are several theaters that are in fairly significant disrepair. He told you that the typical CapEx was closer to 500 million pre-COVID. We can look back in the records and see what it actually was in case he was throwing out a number that it should be now, given the upgrades with laser, et cetera. But that I haven't had a chance to look up. But 34 million is really low given how many theaters and screens there actually are. I mean, 34 million seems like the CapEx on something that isn't trying to be an entertainment location. Okay. So I believe that CapEx is probably low. I'll have to do a little bit more work to determine what the right number is. Also, there are more than one opportunity that's opened up that needs to be funded. For example, he talked about bars in New York City. The laws have changed and New Yorkers are drinkers and they will absolutely buy alcohol at AMC. No question. Some people asked him about acquisitions and he's like, only if it's like a bargain basement price. What does that mean in financial terms? That means that when you buy it, it immediately adds to earning. It's immediately accretive. He threw out some numbers like 3 times EBITDA. What he's saying when you buy it at that is that immediately that thing cash flows enough to where you get operating margin expansion, like I showed on the first side, and you get more earnings. So that's what the dealio is there. So that would be one use of proceeds. And then the final things were funding these kind of new ventures to extend the brand, what I call brand expansion, which is essentially putting the AMC logo on various candies and other things going forward. Okay, so that's what I've got. Let's see what questions. Okay, so hopefully I answered why. Pretty much a guarantee on further dilution. He will probably do a combination of both. What a guy, to be fair, because the $3 billion has to be moved. And my suspicion is he raises capital, improves the credit rating, and then just tries to finance the rest of it, because there is no such thing. Very few companies. I mean, I know everybody loves GameStop, and I probably should cover that as much as I cover this, just to balance it out, because I really think that both companies are so interesting and so fascinating. GameStop is really special in that it has no debt. Most companies have about 2 times leverage. Okay. I mean, AMC's rocking a lot of leverage, so they're nowhere near that. But if he just brings it closer to 2 times leverage, that interest expense will become really marginal. It won't be a big deal for them to carry. I think that's what happens. But you got to move the $3 billion. Howdy and thank you. Let me just give a shout out to Rodney. Thank you for coming. Let me see if there's some questions in here, because I have to go meet up with a friend. She's not there for investors. Wouldn't believe it. I have no idea what Mike is saying. Okay. All right. That's it. Thank you guys so much for coming. Hopefully, Jerry, shout out, Tarek, shout out, Trendboard. Always lovely to have you. Yes, got to give a little Barbenheimer shout out to Blessed Out the West. And Nova Kane, thank you for being so supportive all the time. And 8 Blazin does stuff. You guys have crazy names. I love it. Okay, hopefully I got everybody. Oh, with C Limit, I haven't seen this newest one. I've just seen all the other. So there's one guy that's suing, and then there's a tale of silliness on the lawsuits. And I don't really follow the tale of silliness except to identify that it's silly and then move on. Because most of the lawsuits that are coming out, they don't really, there's no actual legal grit to it. It's just someone who's very upset that their stock price is down. And I have a lot of empathy for that. That does suck. Look, it always sucks to have an investment that isn't going the right way, but you can't take someone to court if you don't really have any legal case. So that kind of is what it is. Okay, this is a good question. The latest on the court case, the Delaware Supreme Court has a rejected emergency appeal that aimed to move the lawsuit to. Okay, so essentially, good question. This usually means, now I'm not a lawyer, so you can get someone that says it in lawyer speak, but essentially the way that I'm reading this without looking at the actual release is that they want to stop this lawsuit and they want to try to work around. I mean, it's pretty clear, although you really never know until the judge comes out. It's fairly clear that she thinks that there's only one lawyer she's willing to listen to, and that everybody else, Miss Izzo, et cetera, even though, best of intentions from their part, not necessarily saying that they're, whatever it is, but they just don't have a legal case. It's pretty clear that that's how Judge Stern feels. How she's going to then rule on this final case is another thing. But my suspicion is that whoever it is on the plaintiff's side wants to go ahead and preemptively take it to her boss. Okay, that's really what this language is. And so the Delaware Supreme Court was like, "No, dude, you need to listen to my girl, Judge Zern." That's the way that I would read that. Hopefully that clarifies, and I've said that in a way that's straightforward. Novocaine, thank you. It's so weird. I have this like mini delay. Something about the settlement here. Thanks. Okay. I think I got everybody. If not, put it in the comments. I'm one lady. I've got about 70 companies left in the S&P 500 to take a look at. And I definitely, because so many of you also are following my videos on Upstart, I am going to try very hard to get that out before the open tomorrow. Good luck to everybody. There's a lot of great people that are posting content on AMC. And I think if I've learned anything about this whole journey with AMC, it's awesome how much people are interested in caring about their investments. So let me know how I can help. Oh, we do have a couple more. Is Devon on my list? I have listened to the Devon call, and it is definitely on my list. I am a long-term holder of Devon. This quarter was not bad, but right now no one's getting any credit in energy because people look at earnings and revenue, and that's actually not how you traditionally analyze energy. But I'll go through that. If that's something you care about, can you just put it in the comments that you care on that? And I'll do like an energy thing at some point. Because right now energy is going to trade really funky with the day traders. And to the extent that you get opportunities, all of it will give dividends. Because here's the thing, in the US, so off topic, I'm so sorry. But in the US, we make all energy companies pretty much in the US are very profitable at $60, with quite a lot of energy companies making money at $50 in oil. And even though oil has come in from 120 down to 70, and sometimes it kind of trades between 70 and 80, that is still crazy hella profitable. And it's basically like selling a soda at like 3x what you normally need to sell it at, kind of like that. Cool, very cool. I will do Devon and others. Okay, let's see. There was one other question. The US, it's almost impossible to make class institution, but I'm in France, so I'm just watching this from far away, and it's interesting. Okay, I don't know SC at all, so I'm not even going to pretend Trend Board won. I'm glad it's interesting and that you're enjoying this settlement hearing stuff. Okay, was APE issued as a dividend or a separate stock? Good question. I have a video on this. I'll try to pin it to the bottom part. This can get really confusing. So originally it was issued as a dividend. Okay. You were given a stock dividend of APE shares. And at the point at which it was issued, it was non-dilutive. And the reason it was non-dilutive is because everybody that had a share of AMC got a share of APE. And so it was non-dilutive because all you did was multiply everything for 2. It basically looked like a stock split in some ways, but the language is very precise, and what it then typically means as relates to legally is a totally different thing. However, because they then, the part that's a little bit funky is because it was issued as a separate stock class altogether, and its specific purpose was for dilution to raise capital, which it has done, then it created this whole mess of stuff that there's 100 videos on. So I don't want to make this overly complicated. So yes, it is a separate, it's actually technically not a, like stock actually means something really, really specific, Stank 77. And only because I think definitionally is what's happening and causing all the crazy different posts and stuff out there. They're hard to follow. So technically it is a unit. And I know that sounds like a stupid differentiation, but nonetheless, here we are, right? So it's a unit that's attached to a preferred share class. And so this is a very, yeah. And so the units translate into the share class, which is the preferreds, and then the preferreds are fully convertible into the AMC share. So it's actually 3 instruments, all of which are securities, but really only 2 of them are stocks, and the other one's actually technically this thing called a unit, which I mean, if you use the word stock, I wouldn't care. I would just be like, whatever, we're communicating. But there might be some people legally that have very strong feelings. And so hopefully that, so at the moment that it was given to AMC shareholders, it was not issued as a dividend. However, you wouldn't be wrong to say that they've issued more units, or if you want to use stock, fine, because what they then did was engage in capital raising using the APE shares. So they issued more APE shares at that point to raise capital. So hopefully that clarifies it. If it does not, please put it in the comments, because I swear I'm not trying to be complicated or difficult to understand. All right, just make sure there's no other questions. Gray area. Oh man, it's less of a gray area, and it's more because like usually it wouldn't matter. Usually it would just be like it was issued as a dividend, call it a day. But because we're now in this crazy mess of legal and people have been so precise in what it is they're upset about, I kind of wanted to give you the full details versus like using any kind of slang or simplification in a way that might then make it really hard for you to understand why people have the feelings they have. Okay. Super cool. Thank you, Novocaine. It looks like you guys are saying to me that that was the actual precise language. Yeah. So basically, the plaintiff tried to do a runaround on Judge Zern, it sounds like to me. And it's the equivalent of when somebody goes above you to your boss, and your boss is like, nah, dude, what's wrong with you? That's what happened. So that's what it looks like happened. Hopefully that helps. Cool trend board. I don't know the Singaporean stocks very well. I know certain things, but that one I'm not going to pretend like I know, because I don't like to. Yeah, I don't know it. I don't know it at this point well enough to speak on it. All right, guys, have an awesome evening. Watch lots of movies, and until next time, take care.